Hey everyone, welcome back to the Crypto Explorer channel. Today I'm going to show you how to invest in Solana with the most reliable liquidity pool pair you can get. Not only this will provide you fees 24/7, aka passive income, but also it's actually the best performing pair in the long run in the Solana ecosystem. So I'm going to show you what to do, where to go, and how you can put your money to work on the Solana ecosystem by using a liquidity pool pair that involves the native token Solana and a stablecoin. In the case, we will see that we will use a lot and often USDC. Now, before getting started, let me just show you here the Solana chart. This is the all-time chart. You see, we're on CoinGecko. I'm using the max time metric. This is just to show you that panic sell doesn't help you. For example, if you look at the price back in 2021, you see Solana's token was worth $1, $2, and then it peaked on November up to an all-time high of $250. Pretty much the same value that we see nowadays. This was for past January. So January 24th, we were at around the same price ranges for Solana. But you see this peak here, this peak that started at around October 2024, and from there on the price only went up. Right now it's $147, but it is a much robust chart than if we just zoom in and focus here on the time span for June of 2021 up until June of 2022. Roughly a year, that's how long it lasted, but it was a much more steep chart. So that means that it went up very fast, and usually what goes very fast on the way up will also go very fast on the way down. Virtually, we're looking at a sort of symmetry, and the middle axle of that symmetry here is, of course, the all-time high. Now we see this chart is pretty much different. There's much more organic growth, a slower growth to it. So if you're willing to hold blue chip assets, as you potentially might find Solana, otherwise you probably wouldn't be watching this video, right? If you are willing to hold them for the long run, and you can benefit by providing liquidity into pools. We see that even the people who were true believers on Solana and held, even after this major crash from 250 back to $40, $20, $10. The people who held during this bear market, in a matter of months, they saw their holdings to increase around 10x in price. That's when it pays off to be a believer. So instead of getting depressed by potentially seeing your holdings having this major decrease and now you think you're holding the bag, think again, you're holding a blue chip asset and you can actually profit from these charts that chop sideways by providing liquidity. So let's check here DeFi Llama just so to prove a point. So Solana right now they're ranking second biggest blockchain. They are actually in many metrics the leading blockchain. When we look at active addresses, for example, Solana leads the way. Although they don't have nearly the same amount of protocols that Ethereum or BSC have. Solana has a little over 200 protocols active on chain, and all the other players have much more. So let's sort this also by 24 hours DEX volume. Again, Solana ranks on the top 3, they're ranking second. 24-hour chain fees, Solana ranks still second. With volume comes fees, guys, and that's what we're looking at. 24-hour DEX's volume. This is the volume being traded in decentralized exchanges. Anyone can come here, provide liquidity, earn some passive income. So now I'm going to show you how you can find the leading DEXes on Solana, the decentralized exchanges that are printing literally on Solana. So these are all the top protocols, right? Sorted out by TVL. In the top 10, how many DEXes can we find? We find Radium, we find Jupiter, we find also Meteora and Orca. 4 DEXes on Solana that you can take advantage of. You can provide liquidity in any of those using their liquidity pools to deposit your assets, earn some passive income. These DEXes are pretty safe, unlike centralized exchanges that here and there get hacked. For example, recently Bybit was hacked. On February the 1st, 2025, 2-3 weeks ago, someone took $1.5 billion worth of Ethereum from one of Bybit's cold wallets. Why does that matter? Well, it matters because none of these exchanges has suffered such a hack. For example, Jupiter has a TVL of $2.2 billion, never got hacked. Radium has $1.34 billion TVL, never got hacked. Meteora is very close to $1 billion TVL. It is the fastest growing DEX on Solana right now. never got hacked. Orca, also a very popular decentralized exchange on Solana that also performs really well for liquidity providers, never got hacked. TVL right now $262 million. Back in 2021, they had a peak of over $1.2 billion in TVL. We never saw those numbers back again because back in 2021, there was not all that much competition on Solana. Solana was pretty much a very new blockchain, and right now we just saw 4 big DEXes that are competing with Orca, but in any case, you can still use Orca. It's a great platform. And what you need to know is that when you're going to provide liquidity, it's always a good option to split your eggs through different baskets. What I mean is that, for example, if you want to invest on Solana $5,000, you deposit even amounts in between any of these exchanges that we just saw. That's potentially something that you could do. So I'm going to go ahead and show you on each of these DEXes the best performing pools and show you why I think Solana paired with USDC it's going to be a winner for liquidity providers. So remember, this is a strategy for the long run. You should be comfortable holding Solana in the long run. Either the price goes up and down. But if you are willing to do that, you can profit by, for example, I'm going to use this time frame where the price was chopping sideways in between $40 at highs and $20 at lows. In the meanwhile, you can provide liquidity and earn fees both in the shape of Solana and USDC. And we're talking about a time frame of roughly 1 year, so June 4th of 2022 up until September, October of 2023. So roughly a year and a couple of months, while you can be getting more Solana because you're getting paid in the Solana token as well, and you are essentially accumulating. When the price skyrockets, the Solana you accumulated during that time frame, it's gonna pay off big time. So that's the deal. That's what I'm showing you here on this video. Now, instead of going one by one and checking each of those protocols for the best liquidity pools, what we're gonna do is that we're gonna go here on GeckoTerminal.com and we are going to use it to source for the best pools on Solana, because this is a decentralized exchanges, a DEX aggregator that you can select for any of the blockchains that they do support. And luckily you can find Solana here. So I went ahead, clicked Solana, and now it's showing me all the trending liquidity pools here. I want to go with 24 hours time frame. So from here on, I'm sorting this out by volume. And there we go, guys. Solana paired with USDC. #1 trending pair for liquidity pools. This means that this pair is the most traded on chain. It is a liquidity pool that has been operating for over a year. Volume $232 million. Liquidity $31 million. This means that it is printing. Why is it that? Because $31 million or $31.5 million, this is how much liquidity providers as a whole, as a community, deposited in this liquidity pool. And by the way, this is not the only one with Solana and USDC, as we will see later on. But we are talking at a volume to liquidity ratio at around something like 8x. So the more volume, the better, because whenever traders trade in this specific pair, you as a liquidity provider get to profit from it. So if we want more information about it, we click the pool. This shows us that the pair is allocated on the Orca DEX. You see, it's showing us the path. We are on the Solana blockchain. You see on the upper left corner, then it's showing Orca. Like I said, although the TVL is not as high as it was back in 2021, it's still printing. You just need to know what to do, where to find stuff, and that's what this channel is all about, helping people onboard crypto, do this very simple on-chain analysis, find best opportunities to yield farm and legit opportunities to yield farm. It doesn't mean that it is riskless, of course not, but it's much better than blindly depositing your funds in centralized exchanges where no one knows what happens behind those closed doors, all right? In here, the difference is that everything is on chain, everything can be tracked on chain. It is publicly available information, okay guys? So GeckoTerminal gives you a ton of info. This is an incredible tool. I already covered it in a past video. Again, if you want to check it out, it will be under in the description. You'll find links for that specific video. It will give you an understanding of how to operate and navigate the protocol, okay? From here on, we can also find some other liquidity pools with the same trading pair. Never mind it's saying wrapped Solana, it's still Solana. It's still the same pair. So you can find something here also on Meteora. Again, TVL or liquidity much lower than volume. That's what we want to see. Radium, the same thing. Liquidity 8 million, volume around 7x that's 56 million. Another liquidity pool on Radium. And this is just the tip of the iceberg, guys. There's plenty more liquidity pools for this pair. Even on each exchange, you'll find several. So from here, we could click the trade button, click on Orca. It will link us up directly to Orca. And from here, we can find the liquidity pool. So you see the tabs up here. You'll click on where it says pools. And then it's already showcasing the first one, Solana paired with USDC. The trading fee here is 0.04%, which is a normal fee for this pool. That's another thing you will see. There will be different pools for the same pair. So the difference will probably be the liquidity pool trading fee here. For example, if you keep scrolling down the list, likely we will find something sooner or later with the same pair. Here it is, Solana paired with USDC. This has a slightly higher fee tier, 0.05%. If you want to pair Solana with another stablecoin, in the case Euro, you can also have it in this pool. But going back here on GeckoTerminal, we can find information specifically DEX by DEX. So let's go back on Solana. Now you see up here there's going to be a ton of different DEXes. Let's go on Radium. Let's see what's trending on Radium. Again, 24 hours. I'm gonna sort it by the highest volume. We're not seeing Solana paired with USDC here. Interesting. Let's sort it out by liquidity. Usually these liquidity pools will have a ton of liquidity in them. Okay, so what I guess it's happening is that it's being overshadowed by all of these meme coin liquidity pools, which get also a ton of action, but they are much more risky. So let's go directly here on Radium, and I'm gonna try to find Solana USDC pairs. So let's sort the pools here by volume for the past 24 hours. Here we go. Top 1, 2, 3, 4 pairs, Solana paired with the stablecoin. I'm not sure why it's not showing here on GeckoTerminal. It should be showing. Maybe I'm messing up something. Let me see here the filters. The filters are empty, so I'm not sure what's happening here, but I'm gonna take the information I see directly from Radium. So we can get an idea of how profitable a pool is. It's showing us the total APR. This is actually, all of these are being incentivized. You see the Radium symbol here, so they're being incentivized with the Ray token. Volume to liquidity ratio, the volume is always higher than the liquidity, and much higher for that case. So you see, just on Radium, you have 4 different pools, 3 if you just want to consider USDC Solana pools, that you could easily spread your assets through and earn passive income. Of course, guys, this applies to all of the other DEXes. For example, let's go here on Meteora. Do the same thing again, order by volume. We find on the top 3, 2 are Solana paired with USDC token pairs. Volume to liquidity ratio, top notch. Extremely high volume to liquidity. 11 months old liquidity pools. They have deep liquidity in the order of millions. So these are pools that I definitely would consider to deposit my assets on. And that's that, guys. I just showed you 3 different DEXes where you can go provide liquidity. Each of those DEXes has multiple liquidity pools for Solana paired with USDC that you can provide liquidity on. Now the key feature will be what ranges should you provide liquidity. That's where backtesting comes very handy. So for example, I'm going to show you here very simply. Let's actually do it on GeckoTerminal. So let's go on Orca. That was the first liquidity pair that we saw. So let's click here. Now let me go full screen to show you better. There's different tools you could use to backtest. For example, METRIX Finance. That's a great one. But I'm just going to show you very simply here. So guys, this is just a brief example. I sorted this as an upper range at around $240 upper price for Solana, and the lower range, the lower price at around 130, 128. So if you set a range like this, although it might not be as appealing, because I know there's a lot of degens, they go into the liquidity pools and they want to have very tight ranges to earn them 5% a day, 10% a day. It is possible, but you will be chasing yields. If you do it like this with wider ranges, not only you will have to rebalance less often, so basically it's going to be more passive. You need to check the markets, yes, but so you can see that for the past roughly 2 months, 3 months, only at this peak, we would have had our position out of range, meaning not generating any fees, zero passive income. So we're talking about January the 18th up until more or less January the 26th. So roughly a week. In a matter of 3 months, only a week, we would have been left out not generating fees. Of course, Solana is a very low cost blockchain when it comes to gas fees. And you can actually have those very tight ranges and follow the price range, chase those yields. Although it's going to be more intensive, you'll have to check charts every day, etc. It's going to consume more of your time. But if you want to keep it completely or the more passive as you can, this is the way to go. This is not going to give you a higher APR, right? But still, what you need to know about providing liquidity to concentrated liquidity pools is that basically you are putting a buying and selling order whenever you set up ranges. For example, on the lower range, now you're holding 100% Solana. If the price meets your lower range, as it did, hypothetically, it did back in February the 28th, now you are holding 100% Solana. So if you deposit $1,000 and you opened your position when the price was at around $200, for example, now you're losing money in a profit and loss analysis. But since you are opening and holding this position because you are bullish on Solana, you wouldn't mind to be holding an asset that you have long-term perspectives on and that you have enough confidence that it will bounce back up. So essentially, the lower range, if the price meets it, you're holding 100% Solana. So all of your USDC that you deposited is being sold. And also, if the price keeps going up, the opposite is also true. You are essentially selling your Solana for USDC as profit. And if the price meets your upper range, now 100% of your position was turned into USDC. And if you're looking at the profit and loss metrics, now you're making money, everything is green. But me, when I provide liquidity to these blue chip assets, what I want is in the long run increase my Solana bag, increase my Bitcoin bag, my Ethereum bag. That's what I want in the long run. I don't really care if the price in the market crashes because I believe in crypto. I think it's the future of finance. I think it will be mass adopted by society. So I'm just growing my bag in the meanwhile. And this applies for every exchange, of course. And for example, if you want to get more technical when you are doing your backtesting, you can always rely on METRIX Finance. Full disclosure, I am affiliated with them, but you can use the free version just to get started, and this will provide you enough information for you to just deploy your ranges. And it's actually one of the very first liquidity managing protocols that I found and used, which not only supported Ethereum and Ethereum layer 2s, but also Solana. For the sake of just showing you very briefly how this works, I selected Orca. Now I'm going to go with the USDC Solana pair. So I'm going to click simulate. So all of this that I'm showing you is the free version, right? But now what you need to do, you scroll down. So you can backtest actually up to 90 days. So you see if I click the plus icon, in order to get more days, it's telling me that this is a METRIX Pro feature. So we're not going to use that, but still 3 months, that's plenty of time to backtest in crypto. And actually we can come up here and switch up the order of the tokens in the pair, and that will give us the correct price for the Solana token. We know that this peak here was at all-time high roughly, so we can put it a little bit down, be a bit more conservative, try to get a better APR by doing that. So let me just adjust things a little bit differently here. And right now we're having actually a wider range. Overall, this is at around 68-70% range. So we're estimating $5.6 in fees for every 24 hours. If you're not happy with it, you can tighten it up a little bit more. And we are at around 55% price fluctuation, both for the upside and downside. And our estimated fees just went up to $6.5. So you get the idea how to work with this amazing tool, METRIX Finance. Links down under in the description if you want to use it. Worth mentioning, guys, in case you're interested, the Pro version also gives you access to a private community and courses. So if you're interested, give it a go. Like I said, my link down will give you a 7-day free trial if you want to check it out. And in case you're wondering, hey, but how much money can I make in that liquidity pool? Well, it will depend. It will depend on the volume. It will depend on the markets, if there's high trading activity or not. But for example, just using Meteora's dashboard here, we see that this same pool, Solana with USDC, has for the past 24 hours earned liquidity providers almost 1.5%. There will be days higher, days lower, but that's why I mentioned in the beginning of the video, Solana was one of the best performing blockchains. It has a ton of volume, and this is something I went over in a different video, telling you why this pair is the #1 for liquidity providers on the Solana ecosystem. And do understand this one thing, guys, this number 1.43% daily is coming at a point in time where we see Solana's price at $143. And usually when we're talking about like these market peaks, the volume is tenfold what it is today. So when you're looking at points in time where the volume is just insanely high, you can see easily this liquidity pair performing 5% a day. This specific trading pair is the foundation of the blockchain. And although Solana made the name pretty much because of the meme coin craze, that meme coin craze will always reflect on this specific pair, because traders enter the blockchain using it and go out of the blockchain. They take profits out of the blockchain using it. So in my opinion, it's pretty much a no-brainer, guys. This is how simply you can invest, set up ranges, do some back testing for any token pair, but in this case we were looking at Solana USDC, the #1 pair you should be providing liquidity to earn passive income on Solana. There's many other ways to earn passive income on Solana. I'll show you those in other videos. In the meanwhile, guys, if you enjoyed this type of content, like and subscribe. If you have any questions, let me know in the comments. Your questions help me to know what things to mention in the videos to help other fellow crypto explorers. Okay, guys? So thank you for watching. Like and subscribe if you haven't. Take care. Go make some money on Solana. I'll see you on the next one.